Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Thursday, it's the 29th of December. My name is Russell Shaw, I'm a senior market specialist at FXCM. My email address is r.fxcm.com. I'm just going to bring up our high-risk investment warning. Can I just double check that you guys can see the screen? Can you see me via camera, and can you hear me? No worries, Howard. Okay, nice to have you. All right, excellent, guys. It's going to be another short session, but we're carrying on from yesterday. So yesterday's webinar is on Telegram, if anybody needs to see it. I'm just going to bring up our market commentaries disclaimer. Okay, and just finally our references. So we're actually just going to be looking at TradingView. I'll bring up Disney, but what I wanted to show you is I put the Dow components into a spreadsheet. Again, I want to stress this is for educational purposes only. I'm not for 1 minute advocating any sort of buy or sell here, but I just want to show you a methodology for a filter. Okay, so what I can do is I can take a look at, yeah, absolutely. Anna's saying she might try this in a competition. If you do, let us know how you go. But in terms of the sorting, I want you guys to sort it from largest to smallest. And this is a 52-week rate of change. So we've got Chevron at 50.81. So let's just bring up Chevron, which is CVX, and we'll talk about Chevron. Okay, so we're just typing in CVX. And you can see that the rate of change is 50.81. I want to just double click into the length is 52 weeks of a rate of change. What it's basically telling you is that you would have made a 50% return over 52 weeks. That's effectively what the rate of change is telling you. And then there's a stochastic, which we're all very familiar with. Now, the question is, well, should we potentially be looking to enter into Chevron, again, hypothetically speaking, on an educational basis? Well, according to this methodology, the actual momentum is starting to dissipate, and the reason I can see that is because the stochastic is starting to fall below 70. So in this particular methodology, I've moved it from 80 to 70, and the reason that I've moved it from 80 to 70 is actually just to give the momentum more room to breathe. More room to breathe, I beg your pardon. So you can see that it's actually falling out. Let's go and take a look at a few others here. So I'll bring up my spreadsheet. Okay, so the next one is Merck, which is a pharmaceutical company, MRK. Let's take a look, see what's happening there. All right, and you can see that this is actually a really strong looking chart in terms of the momentum. We're well above the 70. I don't know how long we're going to stay above 70, but the longer we stay above 70, the greater the chance that this develops into a really meaningful trend on a weekly basis. So you can see Merck's looking a lot stronger than Chevron was just on a basis. So Chevron is short. No, not necessarily. So I want to talk to Chevron is still very close to that 70 level. I would suggest that shorting near the 70 level is not necessarily what we want to do. Chevron might come back into the above that 70. So what we're looking for here on the top, let's go back to the spreadsheet. So what we can do here is we can introduce a few rules. Okay, so we can say, okay, we're looking at 30 companies here. Well, I'm going to look at, say, the top 10. I'm going to look at the top 10. I'm going to look and see, okay, so the top 10 gives me a 52-week rate of change. And then I want to see which of the top 10 are starting to really show signs of positive momentum here. So let's just go down to, say, IBM and Johnson & Johnson. Let's take a look at those two. So let's take a look at IBM. All right, so IBM, again, I want you guys to look necessarily at the direction of the rate of change. All I want you to do is to see, okay, this is where the 4.76 comes from, and you can see it's above that 70. It's above that 70, so it meets the criteria. Yes, I can see it's moving towards the 70 level. It might cross below that. That would disqualify it, but it's not disqualified just yet. And let's take a look at Johnson & Johnson, J&J. And this is looking actually pretty good as well. So over 52 weeks, it's made 3.27%. But more importantly, the current momentum is looking really good at the moment. So what we can be taking a look at is perhaps, the top 10 and seeing, well, which are starting to look adequate. Now, this is a weekly chart. You can do something similar on a monthly. You can change the rate of change to 12 on a monthly. However, it's very important that whichever time frame you monitor this on, you have to monitor on that time frame. So if we're on a weekly time frame, we have to look every week. If we're on a monthly time frame, we have to look every month. And the reason that we do that is because you will see that the list changes. You'll see that companies that are at the bottom of the list will start climbing up, and there's some companies that are at the top of the list that will start climbing down. Effectively, the companies that are starting to climb up, those are really good companies to keep an eye on. The companies that are starting to climb down, yeah, you'll keep an eye on those as well. But in terms of taking action, well, we'll need to get Honeywell from 11. Let's just say it will need to come into the top 10. Anna mentioned shorting. Well, what about taking a look, say, okay, we've looked at the top 10. Well, what about the bottom 10? What about the bottom 10? Are these maybe worth shorting? Let's take a look at Intel, INTC. Let's see if we can see what's going on with Intel. All right, so Intel is looking really stressed at the moment. You can just see how it's come down over 2022. It's actually come down since 2021, right? It's really looking like it's in a stressed state at the moment. So now take a look at this, Anna. If you had shorted Intel a year ago on a sort of a non-margin basis, you would be up 50% because it would have dropped 50%, right? Now, the idea here is, okay, take a look. The momentum over here. So this is a really good example. The momentum over here climbs below that 30. And if you're taking a short sort of below that 30, well, that would have been a really good short to be in. Well, take a look what's happening again. It's about to drop back below that 30. So whoever is a shareholder of Intel should be quite fearful, because if it drops below that 30 and holds below that 30, well, then the pressure's to the downside. If the pressure's to the downside, well, that makes it a short candidate, not a long candidate. Let's just take a look at one more on the short side. Let's take a look at Salesforce CRM. Okay. All right. So Salesforce is down 49%. It's also looking like it's a company that's been under stress. Not quite as long as Intel, but certainly since 2022. And again, this would be a short candidate. Why would it be a short candidate? Because the pressure is clearly designated to downside, with the stochastic being under 30. Now, remember, this is positional type of stuff, right? So if it's positional type of stuff, your money management still comes in, risk management, all that good stuff that we talk about, the swing trading. So yesterday, I actually left out something that was key, and that's very important. So let's just say somebody decides to go into 10 positions, 10 long positions. Okay, let's say somebody decides to go into 10 long positions, and let's also assume they've got $100,000. That means they allocate $10,000 to each position, and then they've got a portfolio of 10 companies, right? So if you put a 20%, listen to this very carefully, I don't want to get confused with the mathematics. If you get a 20%, I just want to make sure my math is right. So if you put a 20% stop loss on each of those positions, in other words, 10,000, yes, okay, the math is right. 10,000 dropping to 8,000. 10,000 dropping to 8,000. So if you put, now that's a fair stop loss on each position. So I'm talking not 20% overall. I'm not saying that. I'm saying for each position, okay, we put 2,000. No, my math's not right. I have to think this through. We'll talk about the stop loss tomorrow. I'm begging your pardon. Just scrap that last few moments. I want to give it some more thought. I want to introduce the risk management strategy for this tomorrow. I beg your pardon. Didn't mean to confuse you, but it's a very key part of the strategy. My mind's blanking for the time being. I think it's that time of the year. Let's stop at this point, but before we stop, can I just have any questions? Are you guys finding this sort of exposed to this useful? Just let me know if this is useful for you guys, because it's a completely different way of approaching the market. We must conclude with the risk management. I'm going to do that tomorrow. Okay, I'm going to do that tomorrow. But just okay, cool. So Anna's really enjoying it. Just a few others. Can you let me know if you guys are happy with this? And I'll look at a few other ways that we can approach the market. Hey Reggie, morning. Just saw your morning now. Okay, cool. All right, let's wrap here, guys. Tomorrow we're going to talk about this. Can this be applied to Forex? There'll be added complications applying this to Forex, because when we talk about the risk management, it's going to be margined. Okay, it's going to be margined, and if it's margined, it's going to make it more complex. Okay, Anna's saying that she's found Aswath Damodaran. Aswath Damodaran is a fundamental analyst legend. He's a professor. I think it's at Columbia, subject to correction. You must go to his website, Anna. He makes all his spreadsheets available for free. His website is one of the best websites out there in terms of fundamentals and financial modeling. Aswath Damodaran. Yeah, so you just Google Aswath Damodaran homepage. I've actually got it saved somewhere. Let me just see if I can find it, and then let me see if I can find it. And yeah, hold for me one moment. Okay, I'm just going to put Professor Damodaran's webpage and send it to you guys. I'll send it to all. Okay, Stern University, New York. He's part of the Stern Business School from New York University. Did you guys get Professor Damodaran's? Have I sent it? Oh, there, I've just sent it. Did you guys get his address? This is the most unbelievable resource on the internet. Just let me know if you've got that. Derek, just send me an email. It's no use actually going through to the JHB. It's no use going through to the JHB office. Just send me the email. I'll take care of it for you. Joachim, I'm going to send it to you privately. Just let me know if you get it. Did you get it, Joachim? Okay, cool. Okay, cool. Alrighty. And he's also got some good textbooks out there, by the way. I haven't read his textbooks. I actually chose to go with so there's different valuation textbooks, and I went with the McKinsey textbook. The McKinsey textbook's very good as well. All right, let's wrap up here, guys. We're going to do the risk management tomorrow. It's very important. My mathematics is letting me down today. All right, guys. I shall chat with you. I shall chat with you tomorrow. Have a good day and a good evening ahead.